As you pay down your mortgage, you build up equity in your home. This equity can be accessed by you in many ways, but make sure you aren't making this one mistake that can dissolve a big portion of your equity. Before we get in this video, I'd ask if you can like, subscribe, and share this video with a family member or friend, as it helps my channel grow and reach more Canadians who are looking to learn about the mortgage and real estate industry. As I mentioned in the intro, having equity in your home is great because you can actually access that equity through different methods like a refinance, a HELOC, or a second position mortgage. This will allow you to access the equity in your home to put a child through schooling, to fund renovations, or use towards investments. But that equity in your home isn't guaranteed, and there's a couple of ways you can lose that equity in your home. For example, with price fluctuations, when the value of your home goes up or down, so does your equity. So if the value of your home was to go up $100,000, you would gain $100,000 of equity. But if your home was to drop $100,000, you would lose $100,000 of equity. Another way you can lose equity in your home is through mortgage penalties. Mortgage penalties are something you get charged if you break the terms of your mortgage before maturity. So for example, if you have 3 years left on a closed mortgage and you're looking to refinance now or even sell, which would be breaking your mortgage contract, you still have 3 years left in that contract. So you're breaking the mortgage early, meaning you'll be charged a penalty. And in fact, 60% of Canadians actually break their mortgage before their term ends. So theoretically, you're more likely to break your mortgage before maturity rather than finishing out the term you agreed upon with the lender. In the moment, you may not think that you're going to have to refinance or sell your home, break your mortgage early. So you may lock into a 5-year fixed rate mortgage. But people's lives and situations can change unexpectedly. That's why it's so important to plan for the worst. 5 years down the line is a long time to look ahead, and you should be expecting the unexpected. No one predicted that COVID was going to happen, but it did, and it impacted every Canadian financially one way or another. So now I'm going to talk about the different types of mortgage penalties that you could be charged, giving a more in-depth guide of what they are, and explaining what type of penalty is associated with your mortgage. So the two different types of penalties are either 3 months interest or something called interest rate differential. 3 months interest is pretty easy to explain. You just take what you're paying in interest monthly and multiply that by 3, and that would be your prepayment penalty. But interest rate differential is a little bit more complicated. Interest rate differential takes a posted rates at the time you started your mortgage contract and compares them with current market rates. So they're going to be using that plus your mortgage amount plus time remaining in your mortgage to kind of determine a prepayment penalty. See, when you're locked into a 5-year fixed rate mortgage at, let's say, 5.14% and current rates are 3%, and you're refinancing to try and take advantage of these current market lower 3% rates, your lender is losing on interest because they were lending you money out at 5.14, and now they're going to have to lend that money out at competitive market rates, which would be around that 3% range that you're getting. So that's kind of what lenders use to base their interest rate differential penalties on. Each lender calculates their interest rate differential penalties a little bit different, so that's why it's important to reach out to your lenders to get that exact prepayment penalty number. But interest rate differential penalties have the potential to be quite sizable. Here's an example of an article where a woman was forced to sell her home due to COVID, and the penalty to break that mortgage was $30,000. Now that's $30,000 of equity gone like that. So using this prepayment penalty of $30,000, let's do an example of you maybe wanting to refinance to take advantage of lower rates. So let's say you have a home valued at $500,000 with a current mortgage balance of $100,000, and you're paying 5% in interest, but current market rates are 3%, and you're looking to take advantage of 3% rates. You can refinance that $500,000 home up to 80% of its value, which in this case scenario would be $400,000. So now let's say you're looking to take out $200,000 of equity for whatever reason. You would refinance for a new mortgage of approximately $300,000, $100,000 of that going towards paying off your old mortgage balance, leaving you with $200,000 left in equity. But you have to take into consideration that prepayment penalty of $30,000. So instead of your new mortgage being $300,000, it would now now be approximately $330,000 because you have to take into account that mortgage penalty that you'll have to pay. So now, knowing you had a $30,000 penalty to refinance your mortgage, would you still proceed with the refinance? Some people don't have that choice and just bite the bullet paying the penalty because they need those funds. So that's why it's so important to align your mortgage product with your future plans and goals. For example, if you were purchasing a home and you knew in 2 or 3 years down the line you were going to be selling, or you needed to refinance, whatever it was, you had to break that mortgage contract early, it wouldn't make sense to go on a 5-year fixed rate mortgage. You either want to be in a variable rate mortgage, and I'll explain that later, or a 2 to 3 year fixed rate mortgage to minimize or eliminate that penalty altogether. So now, what penalty is associated with your mortgage? Typically, variable rate mortgages have 3 months interest penalties associated with them. Now, fixed rate, on the other hand, either have 3 months interest rate or interest rate differential, whichever is greater. You'll want to reach out to your lender to get the exact answer on what penalty you have, but generally those are the mortgage penalties attached to the different rate types. Now, the final thing I'm going to be talking about are, can you avoid the penalty? So yes, you can avoid the penalty. You get charged a penalty when you're in a closed mortgage. You can go into an open mortgage that doesn't have any strings attached, which you can pay out at any time, but open mortgages have higher rates and they're not really used for long-term solutions. It's more as used for a short-term period of time. The best thing to do when trying to minimize that rate is either go into a variable rate mortgage or match up your mortgage term with your lifestyle and goals. So like I just mentioned, if you're going to be selling or refinancing in 2 to 3 years, don't go into 5-year mortgage, go into a 2 to 3 year mortgage, because even if you go into a 3-year mortgage and now you're looking to break your mortgage contract in 2 years, that penalty is going to be smaller because interest rate differential penalty also takes into account how much time's left on in your term. So if you have a 3-year term, that means you have 1 more year left, rather than if you had a 5-year term, you'd still have 3 more years left. Hopefully you got some value out of this video. If you did, please like, subscribe, and share this video with a family member or a friend. And remember, I have those 3 free mortgage guides. The first one is for first-time homebuyers. If you're a first-time homebuyer looking to get into the housing market, go check this guide out. It will provide you with a first-time homebuyer's checklist, the do's and don'ts of buying your first home, and more. The next is a refinancing guide. So if you're watching this video, you may have some interest in this guide, or if you're looking to refinance, make sure to read that first. And the final one is, you found your dream home, now you need to obtain financing. So those are free, link in the description below. If you have any questions, please comment them below. I'll make sure to answer any questions. And if you want to book a one-on-one call with me, I have my calendar link below. So that's in the description. Go click on that, fill out a time slot, and I'll be happy to answer any questions you have.